Welcome back. You're still tuned into Trading Hour. The market is only moving higher. It's now over 250 points in the green for the Nifty, and the mid-cap index is over 600 points. It is the banks also which are showing a lot of strength today, so that index will come up for you. Of course, this is a theme that we've seen repeat over and over again, but today it's up over 600 points on the Nifty bank. So let's now bring you some interesting opinion. This came in from Hiren Ved, CEO, Director and CIO at Alchemy Capital Management, and he says that the market is heading much higher, and he gives all of his earnings and sectoral outlook as well. So let's listen into that.
We continue to remain very, very constructive on the market. We've thrown everything at this market, right, for the last 12 months, right from rising rates to inflation, to the Ukraine war, to the energy crisis in Europe. And despite that, if the market's just shy of its all-time highs, it's telling you something, that this is more structural. India is in a great position, despite all the challenges that we are seeing around the world. And I have no doubt that our markets structurally are heading to much higher levels than where they are today. Okay. The resilience has been great. Having said that, in the short run, what we've seen in the past is that usually if there is a deep cut globally, then a catch-up happens. But I think in the medium to long term, I still believe that Indian markets will decouple from the global markets, because I think we are in a very different situation and stage. Unlike in the past cycles where our macro was very, very challenged and FI flows were the predominant flows in the Indian markets. Today you now have a very robust domestic liquidity which is consistently going into the market. We typically tend to bottom out at somewhere between 1.5% to 2% of GDP. But once we bottom out and earnings start to improve, that ratio goes up 3x from where you were at the bottom, right? So you were at 2% in March 20. You're now at 4% in 2 years. And the previous peak we saw was in 2007-8, when we went to about 7.5% of GDP. More likely, the next peak will be higher than the previous peak, because that's what's happened in the last few cycles. But even for argument's sake, if you take 7 as a number and you say we will achieve that 3 years down the line, and then you work backwards, you will see that earnings will grow at 20% plus.
Earnings to grow at 20% plus.